Greetings traders, Jason here with SwingHigh.com. It is Monday, October 12th, 2009, and we're seeing some indecision in the markets today. I'm happy to announce that I will no longer be redirecting you to screencast.com to view my videos. As you can see, they are embedded directly in the posts now, so that's good news. Also, take today's move with a grain of salt because it was Columbus Day, and as expected, we did see much lower volume than normal. So, let's take a look. The Dow moved up 0.21% today, NASDAQ down 0.01%, and the S&P up 0.44%. Keep in mind that the NASDAQ is often considered a leading index, and it was showing relative weakness to the other two indexes today. Let's take a look at the SPY here. This morning we gapped up, and later in the session we came back and almost had a perfect gap fill. Not quite, but it was still considered, I still consider it a pretty good gap fill. And finished the day with a small rally, and that was enough to give us a Doji formation on the daily chart. And check out where this Doji is. It's exactly under resistance, just like I thought. So it's good to see that the markets are behaving and that we are finding major resistance where major resistance should be found. Check it out. The red line here, which indicates the highs of 2009, was pretty much tagged today, and then we dropped after that. And also we have this rising wedge formation, which was acting, or the bottom of the rising wedge was support, broken. Support once broken becomes resistance, and that's where we're sitting right now. So technically we should start rolling over here. The fundamentals are still horrible, so don't give me that argument. If we do start rolling over here after this 7-bar run up and a Doji, it could be the start of a double top formation. We have an equal swing high, and if we start to go down, that could be the start of a double top. Keep in mind that double top is not confirmed until we break the 1025 area or 102 area on the spider. Once that's broken, things could get really, really ugly and really fast. I want to draw your attention to the volume as well. See this pink line I have drawn here on the volume? During this entire 6-month run-up we've had, volume has just been creeping down, and right now we are seeing very, very thin volume for what is considered average. The only trade I made today was at the end of the day when I saw that the markets were forming this Doji. I added to my short position, which I did by buying the SPXU, which is the inverse ETF. It's triple leveraged of the spiders. So that's sort of like a hedge and also a preparation for the down move that could come here. But keep in mind the markets can do whatever they want. Like I said before, if we break back into this rising wedge, we could see a run to the 1100 area. But I don't see us getting much higher than that for the year. This week we have some big news coming out. On Wednesday we have retail sales, and on Thursday we have CPI. Also, we have some big companies reporting earnings this week. We have Intel, Google, GE, Johnson & Johnson, JP Morgan, Citigroup, Goldman Sachs, and Bank of America. These names are huge, so if they beat earnings, which is very possible because estimates are really low, that could move the markets higher, so be careful. That's all I have for you today. Check back tomorrow for another post-market analysis. Thank you for being part of SwingHigh.com.